Episode 4. Objective Thinking. Trading with a Cool Head. Welcome back to Episode 4 of Journey to the Zone. Secrets of a Successful Trader, on the V-Invest channel. I'm thrilled to catch up with you on this journey as we keep uncovering the keys to mastering the mindset and art of trading. Aiming for that state I call the zone. If you tuned into Episode 3, you'll recall we tackled thinking in probabilities, seeing trading as a game of odds where you don't need to nail every call. Just stick to your system and let the numbers work their magic. Today, we're diving into Chapter 3 of Mark Douglas's Trading in the Zone. A chapter I'm convinced will take your mindset to the next level. Our focus this time? Objective thinking. The ability to trade without letting personal emotions or biases cloud your vision. It's a critical step toward the zone, where you see the market for what it really is, not what you wish it to be. I'll walk you through the deep lessons from this chapter, blend in my own real-world experiences, and show you how to put this into your trading game. This'll be a long, detailed, and inspiring chat, so get ready to dive deep into the trading world with me. Picture this. You're standing in front of a massive painting, bursting with colors and details. Up close, it's a mess. Random red streaks, green patches, some yellow smudges. You can't make sense of it, so you start guessing. Maybe it's a bird? A tree? Step back, though, and the full picture hits. A stunning landscape with snow-capped mountains, lush forests, and a blazing sky. Trading's the same deal. When emotions or personal expectations take over, you're stuck on the messy bits. A losing trade, a wild day, a surprise news drop. But learn to see the market objectively, and the big picture snaps into focus. A long-term game you can win with a cool head. In Chapter 3 of Trading in the Zone, Mark Douglas drives home a point. To succeed in trading, you have to see the market as it really is, not as you want it to be. Sounds simple, but it's a beast to pull off. We're human. We've got emotions, beliefs, and past experiences that tint how we see everything. To hit the zone, though, you've got to shove that stuff aside and trade with an objective, unbiased mind. When I first read this chapter, I was hooked by its depth. Before, I let emotions and personal biases run my trades. If I liked a company, maybe I used their stuff or loved the CEO's story, I'd bend over backwards to justify buying their stock, even if the charts screamed no. After a loss, I'd revenge trade, jumping into new orders without thinking. Chapter 3 showed me those calls weren't based on market reality. They were about my feelings and wishes. Let me take you back to my early days with a story. I decided to buy stock in a tech company I adored. I used their phones, their laptops daily, and I was sold on their growth. Their financials checked out. Steady revenue, solid profits, a hot new product I swore would kill it. Golden opportunity, I thought. I ignored the chart, flashing bearish signals, and dumped the biggest chunk I dared into that buy. Guess what? The stock didn't climb. It tanked days later after a rival's bad report dragged the sector down. I sat there, watching my account bleed, drowning in disappointment. Why's this happening? This company's amazing. But then it hit me. I wasn't trading the market's truth. I was trading my love for the company. I wanted it to rise because I liked it, not because the market said so. Douglas calls this trading on illusions. We let subjective beliefs, like, this company's too good to fail, or, price has to rise because I worked hard, steer us. The market doesn't care about your illusions. It reflects what's real. Supply, demand, crowd vibes, stuff beyond your grip. To win, you've got to ditch those illusions and see the market like a scientist watching an experiment. So, what's objective thinking? Easy. It's seeing the market without emotions, beliefs, or expectations fogging you up. Trading objectively, you don't judge the market, rage when it bucks your call, or get too hyped when it aligns. You observe, analyze, and act on what's there. No more, no less. When I started rolling with this, things flipped. Before, every loss felt like the market was out to get me. Why's it always tanking when I buy? I'd grumble, blaming the market, news, even imaginary traders, rigging prices. Post Chapter 3, I saw the market isn't against me. It's just doing its thing. I can't control it, but I can control how I react. Here's another story to flesh this out. I was trading Forex, USD, JPY, with a price action system, leaning on support and resistance. I bought when price hit a key support. backed by a bullish candle signal. I was sure it'd win. Everything lined up. Then, bam, price smashed through support and plummeted. Loss hit, and disappointment flooded in. At first, I was mad. The market shouldn't do that. I did it right. I hunted excuses. Missed news? Big players screwing me? Then I paused. Does this even matter? Blaming the market didn't change the red. I'd just make worse calls stewing in negativity. Instead, I went objective, pulled up my journal, reviewed the trade. Yep, I followed my system. Price breaking support wasn't my fault, it was the market's call. Out of my hands, I logged it, shut down, and moved to the next trade. Funny thing? That next one won big, covering the loss and then some. That's when it clicked. Objective thinking pulled me past the emotional muck. Instead of a loss bumming me out, I saw it as an event. Not good, not bad, just part of the grind. Douglas puts it like this: with objective thinking, you don't tie your emotions to single trade outcomes. That's a monster lesson from Chapter 3. It changed my trading for good. But getting there means tackling a big hurdle: personal beliefs. We haul everyday assumptions into trading, like, hard work guarantees wins, or, I can't fail after all this effort. I used to think deep analysis meant no losses. Like each trade tested my smarts. And a loss meant I flunked. Take this gold trade. I was dead sure prices would climb. Bullish chart pattern. Inflation news backing me up. I bought big, betting on a jackpot. Then a surprise Fed report tanked it. Big loss. And failure hit hard. I put in so much work. How'd I lose? Chapter 3 showed me that belief. Effort equals wins was bunk. The market doesn't reward grind. It mirrors reality. Supply, demand, chaos. I started ditching personal beliefs. Focusing on what charts showed, not what I wished. Here's how I learned to trade objectively. After that gold flop, I switched gears. Built a checklist for every trade. Clear conditions, solid support, resistance, candle confirmation, volume spike. If one box wasn't ticked, I sat out. No matter how I felt about the market, I put it to work. Saw a buy setup on Euro USD. Gut screamed, go. But my checklist missed a candle signal. I skipped it, kicking myself a bit. Good call. Price crashed right after. Trading on feeling would have burned me. Objectivity and that checklist saved my bacon. Another tale. Trading stocks with a technical system. Set entry, exit rules. One day, a stock screamed bullish. Checklist greenlit it. I bought. Price flipped. Hit my stop. I lost. No sweat. Though, I'd followed the system. Outcome wasn't on me. Next day, same setup. Big win. That's the deal. Objective thinking didn't just dodge emotional traps. It kept me consistent. I stopped judging myself per trade. Just checked if I stuck to the plan. Douglas nails it. Objective trading means you don't see trades as personal battles, just chances to execute your system. Another barrier? Emotional attachment to money. I struggled here big time. Losses felt like losing a piece of me. I'd watch my account dip and think, I worked hard for this cash. How'd I blow it? That sparked rash moves. Holding losers too long hoping for a turnaround. Cutting too soon from panic. Like this crude oil trade. Bought big at key support. Then an inventory shock dropped prices hard. I watched my account shrink. Freaking out. Didn't want to cut. I can't lose this cash. I told myself, it'll rebound. I won't lose this time. It didn't. Cut late. Way bigger loss than planned. That taught me. Tying emotions to money is trading poison. Douglas says, money's just a tool in trading, not your worth. To trade objectively, see each trade as standalone, not a test of your skill or value. I shifted my view. Stopped seeing losses as personal hits. More like business costs. Rent for the gig. Rule. Only risk what I can lose without blinking. Pressure dropped. I didn't freak at losses, it's just the game. Take this NASDAQ trade. Small buy. 1% risk max. Price fell. I lost. No stress. It barely dented me. Kept trading the system. Next 5 trades. Won 3. Covered the loss plus profit. Objective thinking kept me chill and moving. Not stalled by emotion. Here's how you can roll with objective thinking. Steps I've leaned on. 1. Make a checklist. List exact conditions for trades. Support, resistance, signals, volume, no match, no trade, no matter your gut. 2. Detach from money. Risk only what you're cool losing. No regrets. Trades become events, not personal wars. 3. Observe. Don't judge. Loss hits? Don't beat yourself up or blame the market. Log it. Learn. Move on. 4. Practice daily. Objectivity isn't instant. Grind it out with discipline. Remind yourself to stay cool. One more story to hammer this home. Trading an energy stock. Deep analysis. Perfect setup. Clean chart. Good news. Volume pop. I bought. Then a negative environmental report tanked it. Loss hit, but no rage. Checked my list. I'd played it right. Result wasn't mine to own. Shut down. Rested. Next trade won big. Objective thinking kept me out of the emotional spiral. We've covered a ton in episode 4. Objective thinking. Why personal beliefs and money attachment screw traders. And habits to trade without emotional baggage. I hope you see how Douglas frames trading and how this gets you closer to the zone. Next up, episode 5 hits chapter 4 of Trading in the Zone. Consistency. How do you keep steady performance over time? I'll share specific tricks for solid trading habits, plus real stories to back it up. Thanks for sticking with episode 4. If this clicked, subscribe to V Invest and tap the bell for more. I'd love your thoughts. Ever let emotions steer your trades? How'd you break free? Hit me up via email or comments. Wishing you continued success in your trading career. And see you again in episode 5 of this podcast.